Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an absolutely fantastic start to your weekend. In today's video, we are taking a look at the macro and the short-term charts, as well as the total cryptocurrency market cap, discussing all the relevant information and exactly what you need to know about the current price action on both the short-term and the higher time frame charts moving into the new week. Before we get stuck into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop for cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in taking your trading to the next level, join us in VIP. You can do that by clicking the pinned comment, contact our admin by clicking this name. You can find our entire trading track record, 50 plus months, by clicking that first link, or watch a 10-minute exclusive insight into exactly what you'll get access to, showing you inside both the main VIP channel and the multiple group chats by watching this video, which you can find by clicking the second link. You'll get access to trading setups with exact entries, targets, and stop losses, including 5 different subgroups with over 700 members discussing trading, discussing cryptocurrency, and discussing market psychology on a daily basis. Check it all out, guys. We've been operating for over 50 months. We'll see you in the channel. Let's dive into the price action. As we can see over the past couple days, we haven't really had all that much movement for Bitcoin. We've been gradually trending upwards along this diagonal uptrend since around the 11th of March. This is around that $76,000 region, that local area of support we saw a local reversal from after we had this bullish divergence develop as we approached the lower end of this visible range volume profile, lower historical resistance range gap, all right? This gap in the VRPV, which we filled over the course of around 2 weeks since we broke down at 89,000, reaching that first target, that $76,000 level of support, where we discussed the potential for an initial reversal. The big question is, are we going to see the strength shown on the short term continue to develop into the broader and higher time frame charts, which could result in an overall reversal? Or is this just nothing more than a short-term mean reversion toward the upside before we see a broader market-wide correction? These are questions we're going to try and answer in today. And the reality is the answer lays massively in the perceived systematic risk, or should I say the developing perceived systematic risk, which will be heavily influenced by the upcoming Federal Reserve interest rate decision. And we'll discuss all the nuances and intricacies of that in today's video. Let's start on the market data. 24-hour volume and liquidation. Volume is down 9.15% at 151 billion. Pretty low overall considering what we've seen through the rest of 2025 so far. Liquidation sitting at 164. I would say that's pretty medium, pretty neutral, pretty much on par what we do see. That is down 24% though for the last 24 hours, with 118 million coming from short liquidations and the remainder coming from long liquidations, as Bitcoin has slightly moved toward the upside, around about $2,000 to $3,000 in value. Taking a look at the broader markets, the DXY has actually reached that midline level now, a level we were discussing as a target for quite some time, as a consequence of the breakdown of this yearly level of resistance. Of course, this was a prior resistance. It became current support, but we failed to sustain above, and our target then was the middle level of this broader macro channel consolidation. Generally, when we do see deviation to one side, we actually end up correcting through and we see deviation toward the other side. So the overall trajectory of this chart is still going to be pointing downwards. Depending on what happens with the upcoming interest rate decision, could massively skew, or should I say massively reverse this chart if we do see any bearish signs in that meeting, if we see indications that we are not going to get interest rate cuts, or the interest rate cuts are going to happen later than expected. This could result in the DXY moving back up. this could result in the DXY moving back up. But if we do see indications that interest rate cuts are coming sooner than expected, we see indications that interest rate cuts are going to happen in an abundance greater than expected, we could see the DXY actually drop, and this will be very bullish for risk assets. So looking at the S&P 500, overall, it didn't look too amazing here in the weekly. It still doesn't look fantastic. We are underneath that RSI low, the key level being this RSI downtrend. Being under this represents no momentum is overall net negative. And of course, we have dropped below the 50 EMA as well as this prior high at around 5,700. So it's not closing in a position of strength over here. We're not looking too fantastic moving into the new week. It's going to be very interesting to see how this weekly candle develops. And I think both for the stock market, both for the S&P 500 and for Bitcoin, represented by the total market cap over here, this upcoming 7-day period is actually going to be of massive significance. It's going to be really, really important as, again, we have that FOMC meeting, but not only that, if we look at where these markets are, the S&P 500 being just under a critical level of resistance now at that 50 EMA, potentially running the risk of a steeper correction, and the total market cap being at a major multi, at 15, 16 month long uptrend plus RSI confirmation, we are at a breaking point almost, a major decision point where if we do tip toward that downside, if that data comes out and it pushes the price down, it could result in a very aggressive sell-off. However, it could also mark the beginning of a major reversal. So we're in this decision zone now for the market of absolute significance. Now, before we get into the analysis for Bitcoin, make sure to sign up to BitGet, BitUnix, or BingX. You can do that with the links down below. We always say, guys, we only trust these exchanges that we actually trade on. These are the exchanges I use on a daily basis. Now, including that lifetime trading fee discount of 15% that you'll get access to with signing up. You also enter our giveaway. We have a $3,000 giveaway at the moment, plus a rare opportunity to gain a 25% reduction on your trading fees for life, a bonus on top. Go to a free channel, check that out to find out more information, and again, we'll play a quick ad and we'll jump back into the content. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, legends, let's get straight back into the content. Now, I want to start off by talking about the upcoming interest rate decision, because this is going to play a massive role in determining, I guess, the next 4 weeks of price movement. Now, as we know, interest rates control the cost of debt. The cost of debt massively influences the strength of the dollar, and that all goes to influence the asset market. And the asset market is, I guess, what you could call future seeing, right? It adjusts its price in the present to what the market expects to be in a future period. It moves based on something called perceived systematic risk. And interest rates are one of the main drivers of that perceived systematic risk, so it has some of the most influence over risk asset prices. Of course, it doesn't have all influence, but has some of the most influence on risk asset prices. So we do know in 4 days the meeting is going to be of absolute significance, not so much the exact result as we get, because this result will be priced in by the market, but more so the Federal Reserve interest rate meeting they hold after the actual data release, about 30 minutes after. Now, unless we see a result that is wildly different to what is expected at the moment, it is a 99% probability of interest rate pause. Unless we see an actual result that is wildly different from that, if we see an interest rate cut or we see an interest rate hike, the market is unlikely to react too volatile. However, Where the volatility will likely come from will be the meeting after. If the Federal Reserve announce any sort of announcement that moves the market or moves the narrative away from the current narrative, the market will likely be very reactionary. And in that instance, for example, we could see the Federal Reserve talk about how inflation is moving better towards their targets. This may open up the potential for earlier interest rate cuts or more than what they expected to be 2 interest rate cuts in 2025. If they announce that, if they talk in that manner, in that regard, the market will massively rally in anticipation of those eventual cuts occurring in a greater abundancy, pushing the market up now, pricing in what the market is expected to be in a future period today. So that is how that works. Whereas the equal and opposite reaction will occur if they talk more bearish, or if they remain neutral, this developing uncertainty that has been essentially pushing the risk asset market down will continue to be here. So very, very important. Now let's talk about why this is important in terms of a total cryptocurrency market cap. This is the total cryptocurrency market cap, and we are on the log scale over here. Now we can go to a standard chart and you will see the RSI trend line remains. The only difference is this trend line is going to be different. This trend line, of course, on a standard chart is more or less irrelevant. On the log chart, we only use it to represent a key level, which is going to be the horizontal high point of this horizontal this macro descending channel formation. So we can almost, substitute this trend line in for this level. It is both the same level of significance. This is going to be the horizontal high of our prior consolidation structure, retesting that as support on the macro. If we go back to the log chart, essentially representing the fact that if we do lose this level, we are in turn losing the horizontal high and thus entering a steeper downtrend to potentially the 200 moving average. But I don't want to focus on the chart. I want to focus on the momentum. And the momentum is really what is important in this chart. If we take a look at that RSI, particularly the 42.60, we can see that when we broke through the 42.60, that is actually when we initiated the macro reversal of Bitcoin. Going back to the standard chart, you can see we broke through, we entered this macro reversal upwards. Essentially, we entered the bull market for Bitcoin, right? What we noticed throughout the last 2 years, since January 2023, all the way up until January 2025, we have held above the 42.60 on the weekly, having retested it not once, not twice, but now 3 times. And what we can see is around the time of which we have retested the 42, this logarithmic uptrend has held as support. So we have a point of confluence which lines up with our horizontal high of the macro descending channel formation, as well as this major logarithmic uptrend and our RSI. And we know that this is going to act as 2 things. Number one, it will act as confirmation for continuations lower on the higher time frame if the trigger, being the FOMC meeting, comes out bearish and we break below this trend line. Or number 2, it could act as a reversal point to the broader market before we continue upwards and then create again another local top or whatever occurs at that point there. So either way, no matter which way we spin it, this is a critical level of support. And as I mentioned over the last few videos now, in our Telegram, I mentioned I am considerably more bullish on the market down here than I was above $100,000 because of those reasons right there. While these areas hold as support, the potential for reversals remain intact. Have we seen what we need to see to confirm the market is going to continue aggressively upwards? We haven't seen that yet, okay? First and foremost, we haven't got the economic data to confirm that and to shift the narrative. But secondly, from a technical perspective, although the charts have shown some strength from 67,000, the reality is we haven't shown enough strength to really validate the fact that this short-term bounce is going to carry through to the higher timeframe charts. So what does this mean? In context, it means you should be optimistic, but still cautiously optimistic, particularly moving into major economic news events. So let's now talk about what needs to happen for Bitcoin to turn bullish again. And we're going to leave out the economic data. We're just going to assume this has no bearing. And if we are going to apply context to it, we've already talked about what needs to happen for this to, I guess, facilitate an upward continuation. So we've already touched on that. Let's move to the charts and talk about the charts alone. In regards to what the charts will need to do, in regards to what the price action will need to do, we need to see 2 things. And these are the same 2 things we've been talking about now for a very long time, right? We have been talking about this ever since, way back at the start of 2025. For Bitcoin to enter a new uptrend, or at least to end the current higher time frame downtrend. Now, we're not talking about the hourly charts or the 4-hour charts. We'll come back to it in a second. We're talking about the daily. We're talking about the weekly. We're talking about the broader trends. If we want to see extended continuations upwards, Bitcoin is going to need to see a daily positive momentum shift. This is number one. And number two, we need to actually break the downtrend we have been in for the last, 2.5 to 3 months. This being the daily downtrending diagonal resistance. If we are able to break both the RSI trend line and the downward trending resistance, we likely formulate a new trend which has the potential to push us up into $100,000 and maybe higher. All of this needs to happen, the break on the RSI, the break of the trend, before we see a break of the uptrend, the horizontal level, and the RSI and the total market cap. If these three things here occur, it is more likely we see a continuation lower. So that is kind of where we are with the market at the moment. There's a lot of uncertainty. And if we look at the price action, right, just take a look at the price action. There is a whole lot of chop. There is a lot of chop and uncertainty even in these short-term charts. There is very, very unclear structures forming. There are almost no clear consolidations forming. We have just got this trending upward chop followed by aggressive sell-offs, followed by trending upward chop, followed by aggressive sell-offs, followed by weird consolidation, followed by flash moves. It has been an absolute nightmare of price action to, comprehend. And I think a lot of people are seeing this and they're being disheartened. It tricks people into acting when they shouldn't. And I read a really interesting, I guess it was an analogy yesterday, and it was, if you're a surfer, you only go out when the conditions are good. And I think that applies a lot of significance to the market too when we're looking at context for higher time frame moves. When we're looking for multi-month moves, or we're looking for, long-term positions, we have to wait for the conditions to be in our favor before we enter. Now, we're not talking about day trading. We're not talking about scalp trading. We're not talking about intraday ranges or just simple trades. You can do those at any time, provided you have the justification for your entries. But when we're looking at predicting the next multi-month move, predicting, these large swings towards the upside, like we predicted all the way over here, like we predicted all the way over here, or these large swings toward the downside, like we predicted all the way over here, we need to look at a little bit more. And most importantly, we need to wait for confirmation. Confirmation is the insurance you pay to be right. So again, I'll say it. Got no problem personally missing a few percent so that my entry has a significant greater probability of success, because the price is not what makes you money. The percentage change from your entry to your exit is what makes you money. The moment you start thinking about your entries and exits in regards to the price, you run the risk of applying subjective bias and greed. These are very important things I want to go ahead and mention. So that is just what I do. I'm not telling you what to do, of course. I'm simply using this as my own outlet, my own blog, to share what I do and my thought process behind how I trade on this channel. So you can, of course, do whatever you want. If you want to use the price as your guide, go ahead and do so. I personally haven't found any success with that, and that's just what I'm going to say. So taking a look at the short-term price action, let's take a look now at the smaller time frame chart. So this is going to be the hourly uptrend we have been in essentially since the beginning of the retest of 76,000. As we know, if we zoom out again, we do run into this larger cluster of support below 76,000. Now, for many, many weeks, we were telling you guys we were going to see a correction. We were going to see a correction. We're telling you all the way back over here, 100,000 plus. We're telling you that the total, or should I say, the broader charts have seen a breakdown on a 62.09. And historically, every time we saw that, we saw a large correction for Bitcoin of around 10 to 20, even sometimes 50%. We have since seen 21.5% correction. That played out perfectly right to the weekly 50 EMA. I've got nothing more to say about that. But if we're taking a look at this chart now, the question is the correction over? And I think we've answered that in today's video. We've talked more about what needs to happen for the correction to continue. But if we're talking about lower targets, let's hypothetically say the correction does continue, we do run into a major area of support over here. This is going to be a 76 to around $68,000 area. This is our historical resistance range of the macro descending channel formation. We have a whole truckload of support within this consolidation, and it is very likely if we push into these levels that bearish volatility will dry up and the price action will find a potential bottom and reverse. And that is going to be worst case scenario if we do see the price continue lower. There are some warning signs that I do want to mention that could push the price even lower than that. And I'm only mentioning these because we need to be prepared in case it happens. And that is primarily going to be if we go to a 3-day chart over here. On Bitcoin, we can see the Gaussian channel low has been retested on the 3-day. Again, what do you know? It hit the $76,000 region at the low, exactly as we mentioned, a breakthrough midline retest is a low. We are now retested in the midline. If we reject over here, this is going to be the point at which will result in a reversal back under into the 200 moving average, right to 68,000. So that is kind of what we're expecting as a worst case scenario for Bitcoin. If we reject here, we're expecting 68,000. And as we mentioned, best case scenario is see those momentum shifts occur and we see the trend break prior to having that total market cap breakdown. So let's talk about the short-term charts. Now, for the short-term charts, we are in an uptrend. Therefore, while we're in an uptrend, we expect the trend to continue toward the upside. We've got major resistance at $86,000, represents about this horizontal consolidation. Therefore, we have this little pocket, this little apexing zone over here that we're pushing into over the next few days. And this actually lines up the FOMC meeting right at the apex. So if we break down through this uptrend, we are expecting corrections back lower. If we break through this horizontal high, we expect continuations upwards. Until then, expect a slight chop toward the upside as we have been seeing moving into FOMC. I do not think we see drastic movements in the price action just before. Over the next few days, I think we're waiting for the market to have that announcement, and then we will see the movements follow. So thank you for tuning in, guys. Have a fantastic day. Hope you found today's video educational, informative, and of course entertaining, and I'll catch you guys in the next video. See you then.